Hey everybody, Howard here, Otter's Retirement Corner. So, is now the time to panic? Now? As I'm recording this, it's late Monday afternoon. The stock markets are, I'm not going to say in free fall, but they're pretty badly hurt. And we've been seeing this now for you want to say a couple weeks, a few weeks. Sentiment is very negative. Stocks across the board are doing poorly. International stocks had been holding up, but now the last week or so, they've started to bottom out. So, is it capitulation time? Is this where we finally say, you know what? Hey, Howard, tell us to stay the course all you want, but this is getting damn scary. And I'm here to tell you, no, I'm not capitulating to anything. I'm not giving up. I'm not waving the white flag. I'm not saying now's the time to run and hide and get all our money out of stocks or get some money out of stocks or, put some protections in or something, go short. I'm not doing that. And I want to put this in perspective for you, okay? So here's what's happening. And I drew up the three main indices, stock indices, and these are recent highs. Most of these are within the last month or so, roughly. And here's where the prices are now. This is as I record this. They may be lower. They may be a lot lower now. I don't know. They may be higher. So we got 61 to 5,600, 45,000 to 42,000, 20,000 to 17,000. That's what's happened to the indices. S&P is down 8.6% from this recent high. Okay, 6.7% for the Dow and 13.7% for the Nasdaq. Now, the rule of thumb is once you get to a drop of 10%, you're in correction territory. That's what the market would call this. So, for small cap stocks, yes, we could say we are in a correction. Here's what I want to kind of help put in perspective, though. This is, these dates you see here on the side. These are the last times these numbers, these levels were hit. So we're at 56.16 now. We ran up. So the last time we were there was September 18th. And I'm not talking like way back in history. I'm talking about in 24. This was 6 months ago. So in essence, what we've done is chop off the top of the last 6 months, and we've retraced that. For the Dow, it was back in January. It was 2 months ago. So if you were to go back 2 months, even if you were to go back 6 months, we'd say, hey, I'm pretty happy here. If it just leveled off for 6 months, I can live with that. I mean, that's kind of what we're looking at. It was 912 for the Nasdaq, and certainly the Nasdaq moves around a lot more because of the volatility of smaller stocks and technology stocks. But this was last year. This isn't earth-shattering. I had this little chart of the S&P I showed last time, and this goes back 30 years, and I've drawn a line here. You can barely see the tip of it that comes out over there, but this is where the S&P was back in September, about 6 months ago. You go back down to 2000. That's how 2009. Yeah, 2009. 16 years ago, and we've done a pretty good run up. We're gonna lose. We lost a little bit here. We're gonna lose a little bit here. It's gonna happen again. I'm not here to tell you the market's not going to go down more. I'm not here to tell you it's not going to fall another 5, 10, 15, 20%. It may. I don't know. Most of the people you're listening to and reading do not know. There's obviously a lot going on politically right now, good or bad, like it, don't like it, trust it, don't trust it. It's happening. This is how the markets are reacting. What do I do? What do you do? Well, I'm here to tell you I'm not doing anything. And we talked a little bit last time about how bonds help buffet your portfolio against, it just said Warren Buffett, against big movements in the market. So, I've got a lot of international exposure and I've got a lot of bonds, and it helps ease the ride for me. So, here's where I am year to date. I'm down 3.3%. And most of this is just like in the last week or so. Because like I said, international stocks are holding up pretty good. The last I looked last week, I was actually up a little bit year to date. Um, yeah, it's not the end of the world. If this is money you need that you're losing, you should not be in stocks. If you can't sleep, if if you have suicidal thoughts, you should not be in stocks because you can't handle this, and this is going to happen again and again and again. Hopefully, the older you are, the more experienced you are with stuff like this. Like me, I've had to go through enough of these where, in the past I might have made the mistake of trying to trade out and wait for the market to bottom, but you can never guess the bottom. That's why timing doesn't work. You have to be right twice. You have to be right at the top and you have to be right at the bottom. And if you're not, odds are trading in and out is going to cost you money. You're going to get out too late. You're going to get in too late. You're going to get in too early. You're going to get out too early. Something's going to go wrong. Timing does not work. I know some of you are going to make comments for me that it works for you. That's fine. Go ahead and tell me. If you've been successful at it, great, great. But for the majority of us, it doesn't work. So my message today is don't panic. This is not advice. I'm just telling you from an emotional standpoint, don't panic. If you feel you need to make changes because you can't emotionally handle it, can't mentally handle it, then by all means, take a step back and say, is the stock market for me? If you just think, hey, this is, we're down, 13% in the NASDAQ on the way down to 30%, I'm going to get out and wait to go to 30%. You want to do that, do that. All I'm telling you is research shows that typically doesn't work very well for anybody. So ignore the noise. It's hard to. If you want to watch it, you want to monitor it, go ahead and do that. But the question is, where does it get you? I tend to keep pretty close track of these things. I like to talk about them. I like to discuss them with people. So I'll do that, but I'm at the point now where I understand don't make moves based upon this. There's going to be a lot more news coming out in the next few weeks. A lot of it's going to be bad for some of you. A lot of it's going to be good for some of you. It's going to affect stocks. It may also affect bonds. Bonds are holding up pretty well right now. Interest rates may change. Treasuries, if things get really bad with stocks, treasuries tend to do well. So rates will come down and your bonds will do well. But who knows? And that's the point. If you're in this for the long run, these are the kind of things that happen in the long run. And as history goes, this isn't the worst thing that's ever happened. So relax if you can. Again, my message is now's not the time to panic. I'll tell you when it is. No, I won't. I'll tell you when I'm panicking, okay? Let's hope it doesn't get to that. So thanks for watching. Give me your comments. Tell me what you think about this. Where are you at mentally? How badly have you been hurt? How much more do you think you can take? And then we'll talk about it. Thanks again for listening, watching. Please like and subscribe, and we'll talk to you later. Bye.